And Priyesh, many forex traders use either scalping, swing trading, or day trading strategies to reallocate capital. As a long-term position trader, how does your risk management strategy differ?
Okay, so I think one of the similar things is probably that you want to most of the time have a stop loss, whether you're trading or investing. But one of the differences there, which I mean, last week was actually a good example with the Turkish lira gapping on Monday. And that actually made me rethink, is it worth actually holding a stop loss over the weekend, because it doesn't really serve a purpose unless you're with one of these brokers which offers you a guaranteed stop loss, then it's a different thing. But over the weekend, the stop loss isn't really offering you much of a purpose, because if you do have a gap like that, you're just going to get stopped out immediately. And the better option is probably, if you're able to with your broker, then hedge your position instead and then manage it once the markets open up again. So if you're, I think that's whether you're investing or maybe holding medium-term positions over the weekend, that's maybe something to consider on the risk management side. Uh, Also, another difference is with investing, you probably take longer to build up your positions. As I was saying, like the ideal way is you get into your first entry, that starts to move into profit. You move the stop loss to break even, add more entries, and you just sort of repeat that process and keep increasing your exposure without really increasing your risk, which I think, because of the luxury of time you have with investing, you've got a better chance of doing that there rather than with a trade. Um, the other thing I think that's important to consider, you were talking about diversification, and I think with investing, the way I sort of treat my positions are like mini portfolios. So, like for example, one of the mini portfolios I've had running for a few months is a bunch of airline stocks, because they've really struggled to recover from the crash last year. But as things open up, they should start to pick up as well. And at the same time, I've got exposure in your major equity indices. So those two are going to be, to an extent, positively correlated. So then you've got to just consider how much exposure do you really have, even though the ideas to get into the trades might be slightly different. You've got to look at that correlation and just consider how much exposure you've got. So I think that's where diversification maybe becomes a little bit more of a factor. And then the last difference I would say with investing and trading and the way you manage risk is, so trading, you probably just use a stop loss, whereas with investing, I have at times used things like options contracts instead, sometimes to manage the risk. I might still have a stop loss on the position, but I might also buy some options to hedge or protect some of the exposure. So for me, those are really the main differences in how I manage risk on trades versus investment.